Risk management is at the heart of what we do. Our deep-rooted industry and technical expertise enables us to manage the unique risks your business faces. Celebrating 100 years of insurance, good and proper then, now and always.
Welcome back. In this episode of our series on insurance, we're looking at trade credit insurance. My guests are Peter Dingemans, National Practice Leader, Trade Credit at Marsh, Steve Smith, Head of Credit Insurance at Santam Structured Insurance, and Janssen Harper, Managing Director at Credit Innovations. Okay, so before the break, we looked at domestic debtors. Now I want to focus on foreign debtors. Is the process any different, Steve?
The process is very similar, perhaps a little bit more complex. I mean, people who are trading to foreign territories, they often know less about the debtors that they're dealing with. They know less about the legal systems that are in place in those countries, and therefore they're often looking to us as a risk carrier and to their advisors to give them better guidance as to how they should be going about it, who they should be dealing with. Again, I suppose the difference is that it tends to be costlier to deal with because of the access to information is more difficult.
So it's more expensive than domestic.
More expensive. For us, it's more expensive. We have to use networks to go and get information, as opposed to being able to go easily around the corner and find out about something. Not so easy to visit the risks and so on, although that is something that we do as well.
So if you're looking at point 2, point 3 on domestic debtors book, Peter, how much are you looking at for foreign debt?
Again, it depends per country. Obviously, there are countries that impose a much higher risk than, let's say, South Africa or European countries. I think everybody would agree that in Germany is a better risk, country risk than a Nigeria or an Angola, where we've seen quite some issues for the recent years.
So, Steve, some South African companies have been sending off into the oil-rich African nations, and they've been battling to get their money out of the country as currency liquidity dried up. Would they be covered for that, the delays in payment?
Yes, if it's a delay in payment and they're unable to get their money, if we've given them the cover, then we would pay for that. And again, that's the difficulty for us then is how to try and recover that. We would go through a mitigation process again, as we said about the domestic. But again, it becomes much more complex around the legal systems and so on.
And how many claims have you had like that? Has it been fairly common?
There have been several claims in recent years on because of delay of payment. I can't say exact numbers, but there have been several.
So another particular problem, I would say, with foreign debtors is that if you send off your goods and they get stuck in port for months on end because the container ship just can't get in, there's no space. Who would pay for that?
On the export cover, there is additional cover for political risks, for things like rejection and so on. So the coverage does tend to be wider than the normal domestic coverage. So
the point is that you have to first shop around, but also you've got to make sure that the detail in your policy would cover you for all these disparate things.
Exactly, and I think that's where it's important to, when you look at your business risks, to make sure that you cover it, for those particular, if you've got a particular country where those issues do exist. Obviously, it makes the policy more expensive, but it's different cover that you also included in your risk.
But you're obviously not covered for currency risk.
No.
It'll be something separate. Okay, so in domestic debt, you would offer the whole credit intel service, and you'd really give good guidance, it seems. But could you do the same in the same level of detail for foreign companies?
We strive to, yes. I mean, if we don't have all the information ourselves, then we're going to go to various information bureau, and there are a number of them around the world that you can go to get information. Obviously, if you have a network within your organisation, you can use that as well. As you're aware, Santam and Sanlam have recently partnered or completed the deal with Saham. So we should now have a lot better in-country information in a lot more territories, particularly in Africa, around risks that are in those countries, which should be to advantage of our
So
policyholders.
are there some countries and sectors in foreign markets, Peter, where you say it's risky, higher premium?
Yeah, I think most insurers, they once a year they publish a political risk map, and you see a few countries always dark red. Obviously, it's very difficult to get cover on those type of countries, and we just mentioned a few of those names.
So Iran. So do you cover sales going into Iran?
Most insurers would decline Iran at this stage.
And actually, if you have business operations in Iran, would that be a separate cover altogether?
That's a different type of cover.
Okay.
I think most insurers rely also on having reinsurance in place, and a lot of the major reinsurers are based in Europe or in the States, and we also have to be cognizant of what's happening around sanctions.
Absolutely.
We cannot transact around sanction type of areas, particularly if we're heavily dependent on reinsurance.
There's a whole lot of implications of
Exactly.
accepting certain types of business.
Yeah.
So
It's got a lot to do with transparency and governance in countries. So in some countries, information is very easy accessible. In other countries, absolutely not. And it's also about the legal system. In case there's a non-payment, how easy is it for an insurer to salvage or to collect the debt? And these type of things all play a role whether an insurer wants to give cover, yes or no. So the better the institutions are, the better information is, the more comfort insurers will have in covering transactions.
So when there is a bad debt, and how do you go about getting it from a foreign company? Surely it takes longer. You have to get involved in that foreign country's legal system?
Yeah, and it can be very difficult. I mean, we've had some claims in recent times in the Middle East, and we're having to deal with the vagaries of the system there. What you have to do is effectively employ local expertise, and it normally doesn't come cheap, to help you through that process. Again, if you were part of an international network, obviously then it becomes easier because you often would have operations in those territories or close to those territories, which would assist you.
Yeah. Okay, let's go back to small businesses. Peter, you mentioned it in the first half. This is obviously something they should look at, the benefits of cash flow being for one, but the cost on the other side. But are there any particular products which are aimed at the SME environment?
No, I think most insurers offer products per client segment. So definitely for the SME, most insurers have a separate product that often is less administrative, which is easier to manage, and which is a good solution for smaller companies that maybe don't have a full credit management staff that can look after it, and where the owner has to do it himself in the evening hours.
Absolutely.
So those type of products definitely exist, and so it really depends on what the client wants. But I think for SME, great products. Talking about export as well, if you want to expand your business, and we've seen many companies going into foreign countries without the backup, where it can go terribly wrong.
And other tips for SMEs?
Look, I think overall it improves the risk profile of the company. Anybody looking at a company and they know there is an insurance policy covering one of the biggest assets being their debtors, does improve the risk rating on that company, which in effect helps them with better banking rates, high liquidity that they can get on their facilities with banks as well. So yes, you can't look at it in isolation, what the cost of the insurance is. You have to look at the overall package that it gives to your business at the end of the day.
Your tips, Steve?
I think for any policyholder, what's very important is to know who they're doing business with. I think it all starts with them. We come in and we can help, but it still starts with them knowing as best as possible who they're dealing with.
So it would be a case of a price and quality as well.
Yeah.
Okay, so one thing that we haven't spoken about, and I guess is much more domestic debtors, is the cost of trade credit insurance versus factoring. Where you sell off your debtor book to an institution, and it certainly seems to attract some unsavory types of institutions. But how would they compare factoring versus trade credit insurance?
I suppose factoring is where they're getting immediate access to cash for their debtors, and there's a discount which is being applied there for that. Whereas trade credit insurance is relying on them doing their own collections, but it's giving them protection. If they effectively factor, then you could find that the entity that's doing the factoring would actually want to cover themselves on those debtors. So there's always an opportunity for trade credit insurance to be in place.
So it would just get more and more expensive
It's
if the layer of costs added up.
No, I see it as a complementary product.
How?
Factoring is finance, while insurance is a risk mitigant. And the two enhance each other. I think companies that are struggling with their working capital, with their cash, factoring can be a really good product and can help them through difficult cash cycles. I think also the regulatory environment's also changed, and we see in Europe the use of factoring has been tripled over the last 10 years, and it's because of new Basel regulations for banks, and we see an increase in the use of factoring, which can really
so
be
it was
really
nice to know
beneficial
you
for business.
Yeah, so complementary. So risk is the risk side, and factoring is more financing.
Exactly.
Pearls of wisdom from you
Exactly.
all. Thank you so much.
Welcome.
And that's it for now. And thanks to my guests, Peter Dingemans, Steve Smith, and Janssen Harper. And thank you for watching.
"32 countries, 75 innovative risk solutions, 100 years of experience. It all adds up to being the largest general insurer in Africa. Celebrating 100 years of insurance, good and proper then, now, and always.